It's a challenging time for investors right now during this economic shutdown. With advice, we're going to go to our good friend Seth Allen from Cadence Financial at Raymond James. Seth, we spoke a month ago. A lot has changed since then. Are you changing your advice at all in terms of when we spoke last month about what investors should do right now?
Yeah, thanks, Dor, for having me on again. And, I think since we last talked, what we went through since then was a maximum fear event. The CNN fear and greed index, which is a measurement of fear out there or greed, hit an all-time low of 1, which is 1 out of 100. It couldn't get much worse than that. Since that point, if people didn't panic and maybe put a little bit of money to work, if they had cash on the sidelines, have kind of reaped some of the benefits of the rally back, which, just like the sell-off, was absolutely historic. But now we're at a point right now where I think people need to take a step back and really look at their investment strategy and think about what investments they want to be owning as it going forward, both during the shutdown, but more importantly, what it looks like on the other side. Some sectors that I've suggested in the past that can be quite good and have done well through this shutdown is things like gold, renewables, consumer staples. At the same time, I think there's other companies and sectors that have sold off very hard, have come back a bit, and investors may be wondering whether they should be buying them, such as cruise lines or airplanes. And, I tell people that, I don't know if you want to be sitting on a floating prison again, if something were to break out.
Right.
Same thing with the oil sector. Going into this whole thing, oil was having a tough time. And of course, the Russians and Saudis have kind of made friends again. But this week, we saw oil do something historic, and that's still negative for the first time ever.
When we talk about the economic recovery of this, many analysts are saying it could be a V or U shape. What does that mean?
Yeah, we've been hearing a lot of letters being thrown around. In fact, I joked to somebody, the latest one I heard today was a square root. And I feel like you have to go back to your high school math class to figure out, what these letters mean. Here's the reality is we're dealing with a historic, unprecedented time, and none of us really know what the recovery is going to look like. And I also point out to people that a recovery in the stock market is different than recovery in the economy. The economy could stabilize here in the coming months as things come back to normal, but the stock market may struggle depending on what the earnings outlook is and what happens in certain sectors. And so, once again, like I said, the opening of this call is that, investors really, really need to look at their investment strategy and really need to think about what companies are going to survive on a going forward, not only during this pandemic shutdown, but more importantly on the other side. Things aren't going to be the same as they were going into it. People's behaviors, spending patterns, things like that are going to change. And so this means that you really need to think about the kind of strategy and kind of investments you want to have on the other side of this. And there is another side to this. If you're a long-term investor with an active strategy, I gave the analogy that it's going to feel like passing a kidney stone, but it will pass. just like this will pass and we'll be on the other side of this shutdown.
All right, it may be difficult, but it will pass. Thank you so much, Seth. CadenceFinancialGroup.com for more, and we'll see you next time.